Welcome back to Behind the Nation, where we uncover the inner workings of countries and explore what makes them function. I'm Darsh, and today we're diving into a critical topic: economic management. Have you ever wondered how governments decide where to spend, what to save, and how to grow their economies? From balancing budgets to fostering innovation, managing a nation's economy is no small task. It's the backbone of prosperity and stability. In this episode, we'll break down the key components of economic management, including fiscal policies, trade strategies, and the role of foreign investments. Whether you're curious about global economics or how your own country operates, this video will give you a clearer understanding of the decisions that shape nations. So, let's get started and explore the fascinating world of economic management, right here on Behind the Nation, where you can understand the true meaning of a nation. Economic management. Economic management is one of the most critical components of running a country effectively. It involves creating policies, systems, and mechanisms to ensure sustainable growth, reduce inequality, and improve the quality of life for citizens. A well-managed economy balances development with stability and resilience, paving the way for a nation's long-term success. Let's break down the key aspects of economic management. Economic policies, charting the path for growth. Economic policies are the guiding principles that shape a country's economic activities. These policies can be categorized into fiscal policy, monetary policy, and trade policy. Fiscal policy. Fiscal policy deals with government spending and revenue collection through taxation. A government must decide how much to spend on public services, such as education, healthcare, and infrastructure, while ensuring that the revenue generated is sufficient to fund these initiatives. Fiscal discipline is crucial. Overspending can lead to high deficits and debt, while underspending may hamper development. Balancing these aspects ensures the economy remains robust and avoids long-term financial instability. Monetary policy. This policy is managed by a country's central bank, focusing on controlling inflation, stabilizing the currency, and regulating the money supply. Interest rates play a key role here. For example, lowering interest rates can stimulate borrowing and investment, while raising them can help control inflation. Trade policy. Trade policies regulate imports and exports, affecting a country's interaction with the global economy. Striking the right balance between protecting domestic industries and promoting free trade is vital for economic growth. Taxation, funding the economy. Taxation is the primary source of revenue for governments. A well-designed tax system is equitable, efficient, and easy to administer. Direct taxes. These include income tax and corporate tax, which are levied directly on individuals and businesses. Indirect taxes. These are levied on goods and services, such as value-added tax, VAT, or sales tax. Progressive taxation ensures that those with higher incomes contribute more, reducing economic inequality. At the same time, governments must avoid overburdening taxpayers, as excessive taxation can discourage productivity and investment. Budgeting and resource allocation. Budgeting is a crucial tool in economic management. The government prepares an annual budget outlining expected revenues and expenditures. Effective budgeting ensures that resources are allocated to priority areas such as education and healthcare to develop human capital and improve quality of life. Infrastructure development to boost economic activities by building roads, bridges, and communication networks. Defense and security to ensure national safety and stability. A transparent budgeting process builds public trust and ensures that funds are used efficiently. Promoting industries and economic diversification. Economic management includes fostering the growth of key industries while encouraging diversification to reduce reliance on a single sector. Agriculture. This sector provides food security and employment, particularly in developing countries. Modernizing agriculture with technology and infrastructure can significantly boost productivity. Manufacturing. Industrialization creates jobs adds value to raw materials and strengthens exports. Services sector. This includes banking, IT, and tourism, which can drive economic growth in developed and emerging economies. Economic diversification ensures that a country is not overly dependent on one sector, making it more resilient to external shocks such as commodity price fluctuations or global economic downturns. Infrastructure development, building the backbone of the economy. Infrastructure is the foundation of economic activities. It includes transportation systems, energy supply, water resources, and communication networks. Transportation, roads, railways, ports, and airports connect markets, facilitate trade, and improve access to jobs and services. Energy. Reliable energy supply is essential for industries, households, and technological advancement. Digital infrastructure. In today's world, access to high-speed internet and digital platforms is crucial for economic competitiveness. Public-private partnerships can be an effective way to finance large-scale infrastructure projects, reducing the burden on government resources. Employment generation and skill development. Economic management must prioritize job creation to ensure that citizens have access to stable incomes. Policies to promote employment include encouraging small and medium enterprises are significant job creators and drivers of innovation. Providing them with access to credit and reducing regulatory hurdles can stimulate growth. Investing in education and training, equipping the workforce with relevant skills aligns with the demands of a modern economy. Vocational training programs and partnerships with private industries can help bridge the skills gap. Public works programs. In times of high unemployment, governments can launch large-scale infrastructure projects to provide temporary jobs. Social welfare and economic equity. Economic management must address inequality and poverty. Social welfare programs aim to uplift the most vulnerable sections of society. These programs can include cash transfers, direct payments to low-income households, subsidies, reduced costs for essential goods such as food, fuel, and housing, healthcare and education access, ensuring that basic services are affordable and accessible to all. Economic equity not only improves social cohesion but also enhances productivity by enabling more people to contribute to the economy. Encouraging foreign investment. Foreign investment brings capital, technology, and expertise into the country. It also creates jobs and boosts economic growth. To attract foreign investors, a country must maintain political and economic stability, simplify regulations, and reduce bureaucratic hurdles, offer incentives such as tax breaks or access to special economic zones. At the same time, governments must ensure that foreign investments align with national interests and do not exploit local resources. Managing inflation and currency stability. Inflation affects the purchasing power of citizens and the overall stability of the economy. Economic management involves maintaining a stable inflation rate, typically around 2-3% annually. Central banks use tools like adjusting interest rates and controlling the money supply to manage inflation. Similarly, currency stability is crucial for international trade and investment. A stable exchange rate ensures predictability for businesses and investors. Trade and global integration. Trade is a vital component of economic management. It allows countries to specialize in producing goods and services where they have a competitive advantage. Key aspects include export promotion, encouraging industries to produce goods for international markets. Import regulation, protecting domestic industries while allowing access to essential foreign goods. Trade agreements, negotiating with other nations to reduce tariffs and barriers, fostering economic cooperation. Global integration also involves participating in international organizations like the World Trade Organization, WTO, or regional trade blocs, which can enhance economic opportunities. Environmental sustainability in economic management. Economic growth must be sustainable, ensuring that natural resources are preserved for future generations. This involves transitioning to renewable energy sources, promoting eco-friendly industries and practices, implementing policies to reduce carbon emissions and combat climate change. Green economies not only protect the environment, but also open up opportunities in renewable energy, waste management, and sustainable agriculture. Economic monitoring and adaptation. Continuous monitoring of economic indicators such as GDP growth, unemployment rate, inflation, and trade balances is essential. Governments must use this data to adapt policies to emerging challenges. For instance, during an economic recession, stimulus packages can revive demand. In contrast, during periods of overheating, tightening monetary policy can prevent runaway inflation. Conclusion. Economic management is a dynamic process requiring constant evaluation and adaptation. By implementing sound policies, fostering growth across sectors, and ensuring inclusivity and sustainability, governments can build resilient economies that support the aspirations of their citizens. Thank you for joining us today on Behind the Nation, where we explored the fascinating topic of economic management. If you found this video insightful, please take a moment to like, comment, share, and subscribe to the channel. And don't forget to hit the bell icon so you never miss an update. In our next video, we'll dive into social development, a critical aspect of how nations function and thrive. Have questions or thoughts on today's topic? Drop them in the comments below. I'd love to hear from you. Until next time, this is Darsh, reminding you that understanding the inner workings of nations helps us build a better future. Stay curious, stay informed, and I'll see you in the next episode of Behind the Nation.